In 2025, a major tax law shift could quietly erase your side hustle profits if you're not careful. While you might be focused on growing your business, a new set of rules is changing the way your income is tracked, and it could catch you off guard if you're not paying attention. Many side hustlers are so busy juggling orders, clients, and marketing that tax changes slip under the radar. But this year, the stakes are higher than ever. The IRS has raised the reporting threshold for third-party payment platforms like PayPal, Venmo, and Etsy, meaning you'll receive fewer 1,099K forms. In the past, if you made over $600, you'd get a 1,099K from these platforms. Now the threshold is much higher, so many side hustlers won't get any form at all. This might sound like a relief, but it's actually a hidden trap. But don't be fooled, your obligation to report all income hasn't changed. The IRS still expects you to report every dollar you earn, even if you don't get a form in the mail. It's your responsibility to keep accurate records, track your sales, and report your earnings honestly. Many will wrongly assume that no form means no tax, risking penalties and back taxes. This misunderstanding could lead to costly mistakes, audits, and unexpected bills from the IRS. If you're not careful, you could end up paying more in fines than you made from your side hustle. We'll break down what's changed, what hasn't, and how to protect your side income. You'll learn how to keep detailed records, what documents to save, and how to avoid the most common mistakes that trip up side hustlers every year. The responsibility for accurate tax reporting is now squarely on your shoulders, not the platforms. This means you need to be proactive. Don't wait for a form to remind you. Start tracking your income and expenses now, and consider consulting a tax professional if you're unsure. By the end, you'll know how to keep your side hustle profitable and safe from IRS surprises. With the right knowledge and preparation, you can focus on growing your business, confident that you're staying compliant and protecting your hard-earned money. For 2025, payment platforms only send a 1,099K if you earn over $20,000 and have more than 200 transactions. If you don't hit both, you won't get a form, even if you make $19,999 or have 500 sales. This is a big jump from the old $600 rule, which would have triggered a form for almost any side gig. But remember, this only affects 1,099Ks from payment processors, not other forms like 1,099 NEC. The new rule was meant to reduce confusion, but it may lull many into a false sense of security. No 1,099K doesn't mean your income is invisible. It just means you have to track and report it yourself. Here's the bottom line. When it comes to taxes, what you don't know can definitely hurt you. Many people assume that if they don't receive a specific tax form, like a 1,099K or a W-2, they're off the hook. But that's simply not the case. The truth is, you must report all income you earn, no matter how you receive it or whether you get a tax form in the mail. This includes money from side gigs, freelance work, online sales, or even cash payments. The IRS expects you to be honest and thorough, regardless of paperwork. The 1,099K, for example, is just an informational tool for the IRS. It helps them track payments processed through third-party networks, but it's not a free pass if you don't receive one. The absence of a form doesn't mean the income is invisible or untaxable. Many people mistakenly believe that paperwork drives tax obligations, but the law says otherwise. Your responsibility to report income exists whether or not you get a form. The IRS bases its rules on your actual earnings, not just the documents you receive. The IRS expects you to know and report your earnings, regardless of forms. They have sophisticated ways to cross-check information, and they don't rely solely on paperwork to catch mistakes or omissions. They can spot unreported income by analyzing your bank deposits, payment app activity, and other financial data. If your reported income doesn't match your financial footprint, it can raise red flags. If you're ever audited, you'll need solid records to prove your case. Good documentation, like receipts, invoices, and bank statements, can make all the difference in showing the IRS that your tax return is accurate. Without proper records, the IRS can estimate what you owe, often with hefty penalties and interest added on top. This can turn a small oversight into a big financial headache. So don't gamble on the absence of a form. Keep meticulous records, report every dollar you earn, and stay proactive about your taxes. It's the best way to avoid surprises and keep your finances on track. Let's take a closer look at exactly who is impacted by these changes, because the answer might surprise you. Whether you're running a side hustle, freelancing, or just selling a few things online, these new rules could affect you in ways you might not expect. For example, imagine an Etsy seller who earns $15,000 in a year from 300 different customers. Under the new reporting threshold, they won't receive a $1,099K form from Etsy. But here's the catch: all of that income is still fully taxable, and the IRS expects you to report every dollar, even if you never see an official form in your mailbox. The same goes for gig workers like Uber or Lyft drivers. If you make $18,000 from 500 rides, you might assume you're off the IRS's radar if you don't get a $1,099K. But in reality, you're still responsible for reporting all of that income on your tax return, regardless of whether you receive a form or not. Freelancers and independent contractors working through platforms like Upwork or Fiverr are also affected. Even if you earn well below the reporting threshold, you might think your income is off the books. But that's a dangerous misconception. The IRS considers all income from self-employment or contract work to be taxable, no matter how small the amount. Casual resellers, people who sell a few $1,000s worth of items on eBay, Facebook Marketplace, or similar sites, are also included. If you're selling with the intent to make a profit, the IRS sees you as running a business, even if it's just a side gig or a hobby that brings in some extra cash. Failing to report this income doesn't just risk IRS penalties, it also means you could miss out on valuable deductions for business expenses, supplies, or mileage. Keeping accurate records is essential not just for compliance, but to make sure you're not paying more tax than you owe. The IRS isn't concerned with whether you received a $1,099K or not. Their main focus is that you accurately report all your income. If you're audited, they'll look for evidence of unreported earnings, and not having a form won't be an excuse. So if you're making money with the intent to profit, whether it's a full-time business, a side hustle, or just selling a few things online, you're considered a business owner in the eyes of the IRS, and you're required to report that income. Don't let the absence of paperwork or official forms lull you into a false sense of security. Just because you didn't get a $1,099K doesn't mean you're off the hook. The safest and smartest move is to treat every dollar you earn as taxable income, keep detailed records, and report everything accurately. That way, you'll stay compliant, avoid penalties, and make the most of any deductions you're entitled to. The new $20, 200 transaction rule replaces the planned $600 threshold, which would have flooded taxpayers with forms for even minor transactions. The IRS delayed the $600 rule after backlash and confusion, reverting to the higher threshold for 2025. Now millions of side hustlers won't get automatic IRS reporting via $1,099K. This reduces paperwork but increases the risk of underreporting. The IRS is trusting you to self-report accurately, no more safety net. Under the old rule, the IRS could easily match forms to returns. Now, it's up to you to be diligent. Personal record keeping is more important than ever. Failing to report side hustle income, even without a 1099-K, can trigger audits, back taxes, and steep penalties. The IRS can charge interest from the original due date, plus penalties up to 25% of unpaid taxes. If they find negligence or fraud, penalties can soar to 75% or even criminal charges. For example, hiding $10,000 in income could cost you over $5,000 in taxes and penalties if discovered years later. The IRS uses bank data and other sources to spot discrepancies. Audits are stressful and expensive, especially if you lack records. The cost of getting caught far outweighs any short-term gain. The best strategy: report everything, keep records, and avoid trouble. The new One Big Beautiful Bill Act gives W-2 employees big new deductions for overtime and tips, up to $25,000. But gig workers and freelancers don't qualify, even if they work long hours or get tipped through apps. This widens the gap between traditional employees and the self-employed. W-2 workers get automatic tax withholding, benefits, and now extra deductions. Gig workers must handle taxes, benefits, and record-keeping themselves without these new breaks. Don't assume you get the same perks as your W-2 friends. Focus on deductions you can claim, like business expenses, to lower your tax bill. Staying organized is your best defense. Track every payment you receive, Don't rely on payment platforms to do it for you. Use a spreadsheet or app to log income and expenses as you go. Save receipts and categorize expenses to maximize deductions. Set aside 25–30% of your side hustle income for taxes, ideally in a separate account. Remember, you may owe quarterly taxes, including self-employment tax. If you're unsure, consult a tax pro. It's cheaper than an audit. Treat tax planning as a business expense that protects your profits. The 2025 tax changes mean less paperwork but more personal responsibility. Don't mistake the absence of a $1,099K for a tax-free pass. You must report all income, track expenses, and set aside money for taxes. W-2 perks don't apply to gig workers. Know your rules and maximize your deductions. Your side hustle is your hard work. Don't let a tax mistake wipe it out. Stay disciplined, keep records, and report honestly. With the right habits, you'll keep your profits and your peace of mind.